chapter 3. We covered chapter 2 already, so let's close that. Let's go to chapter 3. Chapter 3 is about job order costing, and we're going to have some problems that we're going to solve and see how it goes. Job order costing you normally use for for situations that you have a specific job, which you're not going to do the same thing over and over. It's just one-time job. So here is the exercise. So problem number 1, yeah, that is part of your homework problems, I believe. So let's do exercise number 1, chapter 3. It says the corporation recorded the following transactions for the just completed month. They used $80,000 in raw materials. Oh, were purchased, not used. So $80,000 in raw materials were purchased on account, which is raw materials are materials that still you didn't use for the production, right? So it has a separate T account. We call it raw materials inventory or inventory dash raw materials. 71,000 in raw materials were used in production. Of this amount, $62,000 was for the direct materials and the remainder was for indirect materials. Okay, so let's do those two journal entries. We need to journalize them. And so when you purchase raw materials, so raw materials inventory T account will be debited to increase the asset. Normal balance for any asset is debit. So here we debit that to increase it. And normal balance for any liability is credit. And because it's on account, that means accounts payable will be credited. Then we transferred some of those work in process raw materials into two places, either in work in process as a direct material or into manufacturing overhead as indirect material. So anything that you use directly into the production will be count as direct material. And in order to make something, remember, you need 3 things to make a product. What are those? Direct material, direct labor, and overhead. If you have those 3 things, you finish your product. So direct material will be debited here into work in process for $62,000. However, we took raw materials from the inventory of $71,000. So the difference will be indirect material going into manufacturing overhead. Indirect materials are some form of, glue, supplies, cleaning materials, whatever it might necessary to use in the factory environment, but it's not part of direct material. Okay, so we have work in process already, direct materials there, right there, 62,000. Then it says the labor wage of $112,000 were paid in cash. Of this amount, $101,000 was for direct labor and the remainder was for indirect labor. Okay, so $101,000 of wage has been paid for direct labor who did the production. Okay, so that's 101 goes to work in process. But we paid 112,000, so the remaining 11,000 was for indirect labor, like janitors, let's say people who fix the equipment, people who work in the factory, but they don't involved in direct production. Okay, so that's manufacturing overhead, $11,000 of indirect labor. So far, what do we have? We have direct material of 62,000 in the working process. We have 101,000 of direct labor into working process. Now you need to see what else you have in regards to manufacturing overhead. We have depreciation for equipment to recognize for the month. And that's depreciation of 175,000 that has been incurred, and you need to recognize it. Remember, in regular accounting that you learned before for office equipment, for office equipment, we recognize that as depreciation expense. But in factory environment, we don't call it depreciation expense. We call it manufacturing overhead. So depreciation, accumulated depreciation will be credited, but instead of debit depreciation expense, because it's in the factory environment and it's a factory equipment, we recognize it as manufacturing overhead. However, if you have, let's say, office area, and then you have office equipment depreciation, then you record it as depreciation expense dash office equipment. That's a debit. But here we debit manufacturing overhead because it's factory. Okay, so now let's look at the T account. So in the problem 2, again, it's part of your homework, I believe. In problem 2, companies, a manufacturing company that had no beginning inventories. Okay, got it. That means 0. A subset of the transactions that it recorded during a recent month is shown below. $94,000 in raw materials were purchased for cash. $94,000 purchased for cash. That's right there. That cash is credit to reduce cash, and raw materials inventory has been debited to increase raw material inventory, and the beginning balance was 0. $89,000 in raw materials were used in production. Of this amount, 78,000 went to direct material, the remainder to indirect material. So $78,000, $89,000 were credited, taken out of raw materials inventory. But out of this 89,000, 78,000 was used for direct material, goes to in work in process T account. The remainder, 89 minus 78, goes into manufacturing overhead. Cool. Total labor wage of 132 were incurred and paid. Of course, out of this amount, 112,000 was direct labor, the rest indirect. So 132, 112. So here is it's not showing us, but that is wage expense. Wage expense of 132,000, right? 132,000. Yes, 132,000, and 112 was direct. Okay, so 132,000 wage expense debit, work in process, cash credit, because we paid for that. 132,000 cash was credited because we paid for that. The debit, instead of calling wage expense, we call it work in process because it's direct labor, right? And then we have 20,000, the remaining balance goes into indirect labor as manufacturing overhead. Wage expense in a, let's say, office environment, you call it wage expense. But in a manufacturing environment, if you have direct labor wages, then you put it in work in process. If you have indirect labor wages, then you put it in manufacturing overhead. So there is no wage expense specifically for managerial accounting in the factory environment. In the office environment, yes, but not factory environment. Okay, so let's do one more. Additional manufacturing overhead cost of 143,000 were incurred and paid. So 143,000. So additional manufacturing overhead has been recognized as debit manufacturing overhead and is paid. It might be for factory rent, it might be for factory insurance, it might be for factory utilities, anything that it's related to the factory. So here is the credit cash to pay for those expenses. Okay. Manufacturing overhead of $152,000 was applied based on predetermined overhead rate to production using the company's predetermined overhead rate right there. So $152,000 has been applied to production. Remember, you need to apply the manufacturing overhead, right? So here is how we apply. So out of all those manufacturing overhead costs that we have, we apply based on predetermined rate. Let's say direct labor hours, direct labor dollar amount, machine hours, based on a cost driver, which we learned already. We apply this manufacturing overhead into work in process. So that's a debit work in process, credit manufacturing overhead. Okay. But this application is just based on the estimated manufacturing overhead. It's not accurate. It might be a little bit off, right? So here you see it's $22,000 off. All of the jobs in the process at the end of the month were completed. Perfect. So work in process should become 0. All the completed jobs were shipped to customers. Perfect. So ending inventory, finished goods inventory will be also 0. Any under-applied or over-applied overhead for the period was close to the cost of goods sold. Normally, that's what we do. We close the over-applied or under-applied to cost of goods sold. So, first of all, this finished works work in process is finished. So we transferred the whole thing because it says everything is 0. So we transferred the whole thing to finished goods. That's a debit. So credit, work in process, debit, finished goods. And then the whole finished goods was shipped to customer. So here is $342,000 of finished goods credited to make finished goods 0. And cost of goods sold was debited right there. Cost of goods sold debited. Of course, there is another journal entry is not showing here, which is debiting accounts receivable, credit sales. Let's say you sold it for $400,000. The cost of goods sold is $342,000, but you sold it for $400,000. So the journal entry is debit debit accounts receivable, $400,000, credit sales, $400,000, and then debit cost of goods sold, $342,000, and credit finished goods, $342,000. So now work in process is 0, finished goods is 0, but manufacturing overhead is not. Manufacturing overhead is under applied. By how much? By 22. So we close that under application of manufacturing overhead by crediting additional 22,000 to make it 0 manufacturing overhead balance. and we transfer that into cost of goods sold. And that is total cost of goods sold of $364,000. Okay. Let's do one more problem. Schedule of cost of goods manufactured and cost of goods sold. Company has provided the following data concerning last month's manufacturing operation. Purchase of raw materials, 30,000 increase. Indirect materials used in the production is 5,000. Direct labor is 58,000. Manufacturing overhead applied to work in process is 87,000. And under applied overhead was 4,000. Okay, so raw materials, the beginning was 12,000. We purchased 30. So 12,000 plus 30 is 42. 42 minus 18. What is 42 minus 18? $42 minus 18,000 left over. So that's $24,000 used. $24,000 used. Right? 24,000. So beginning 12 plus 30 is 42 minus 18 is 24. Out of 24 that we used it, 5,000 is indirect. So 24 minus 5, that means 19,000 is direct material. Make sense? How it works? Okay. So prepare a schedule of cost of goods manufactured for the month and prepare the schedule of cost of goods sold for the month. So those are two different reporting. One of them, schedule of cost of goods manufactured. How much did you manufacture? And then schedule of cost of goods sold, you are calculating how much has been recognized as cost of goods sold. Assume that under-applied and over-applied overhead is close to cost of goods sold. Under-applied and over-applied overhead, normally we close them in the cost of goods sold, unless they are material number. If there is too much and it's material number, then normally you close proportionally based on weight, a little bit in the cost of goods sold, a little bit in the work in process, and a little bit into finished goods. But here says, you know what, because imagine it's not big material, so we close it in cost of goods. So that's the normal situation. Okay, so prepare schedule of cost of goods sold. Here is the solution. It says the beginning work in process inventory had $56,000. That's good, right? But here you are using base, BAASE, beginning added available subtract end. This is a very useful concept, and it's easy to remember the way I say beginning added available subtract end, BAASE. I call it base. So the beginning is 56, right? But before I start to do BAASE in here, right there, I have another issue on hand. The issue is how much direct material did I use? So direct materials, I know the beginning is 12,000. We added 30. The total raw materials will be available 42. So B beginning added available. Beginning 12 added 30 available 42. And then end is 18,000. Therefore, used raw materials used, subtracted so-called, is $24,000. BAASE. S is subtracted. Here is subtracted right there. Here is end. BAASE. E stands for end. So beginning, added, available, subtract, end. So here is the subtract, $24,000 that has been used, subtracted and used from the raw material inventory. Out of this, also we used 5,000 for indirect material. So we're going to deduct that at this point to figure out what is actual direct material use, which is 19,000. Okay, so that's material. But in order to make a product, what else you need? You need labor, that's 58,000. And you need manufacturing overhead applied to work in process, which is $87,000. If you add them up, that gives you, in this area, gives you beginning added. So beginning working process was 56, added to working process, which is direct labor, direct material, and overhead, is $164,000. So beginning, added, available, 22,000. Total manufacturing cost available or to account for 220,000. And then you say, okay, what was the ending work in process inventory, which is 65,000. Therefore, you easily can calculate the subtracted, and that's the cost of goods manufactured. That means cost of goods sold, cost of goods manufactured has been subtracted from work in process and transferred to the finished goods. So now we know how much cost of goods manufactured it is, which is $155,000. That means subtracted from work in process and added to the finished goods. Okay, now we say, okay, the finished goods, the beginning was 35. However, we know this much has been subtracted from work in process and transferred to the finished goods. So here is the added. So here we are doing base again. You see, we are doing base constantly. So BAASE, beginning, added, available. Available is 190. Available is 190. Beginning, finished goods, plus added finished goods as a form of cost of goods manufactured and transferred, 155. So available finished goods is 190, available for sale. Ending finished goods is 42. If ending finished goods is 42, then unadjusted cost of goods sold is 148. Unadjusted cost of goods sold is 148. However, because we have underapplied the manufacturing overhead by 4,000, we add that to the cost of goods sold, and we get adjusted cost of goods sold of 152,000. Okay. And here are the information that we used in order to prepare schedule of cost of goods manufactured and transferred to the finished goods, and cost of goods sold that is sold and recognized as cost of goods sold. So from finished goods has been subtracted and has been recognized as cost of goods sold. Okay. So in this chapter, you have few more problems, I believe, but this is a very good review of what's going on in regards to job order costing, chapter 3. Okay. Email me if you have a question or show up in the office hours and I will help you on that. Okay. Have a good day. Bye-bye.